Alright, let's dive into something that's been buzzing in the financial world lately, Egypt's banking sector and its recent liquidity numbers. Now, I know what you're thinking. Liquidity, banking data, sounds boring. But trust me, there's a lot more here than meets the eye. Personally, I think this data is a window into Egypt's economic health and the broader trends shaping emerging markets. So, let's break it down. Here's the headline. Egypt's domestic liquidity hit EGP 15.26 trillion in the first half of 2026. Sounds massive, right? But what's really interesting is that it's actually down from the previous month. Now, this raises a deeper question. Why? Is this a sign of tightening monetary policy, or is there something else at play? In my opinion, it's likely a combination of factors, including global economic pressures and local policy adjustments. What many people don't realize is that liquidity fluctuations can be a canary in the coal mine for economic shifts. One thing that immediately stands out is the decline in the money supply. It dropped to EGP 4.492 trillion in June, which is a pretty significant dip. From my perspective, this could indicate reduced spending power or a shift in how money is circulating in the economy. What this really suggests is that businesses and households might be holding back, possibly due to uncertainty or inflation concerns. And let's not forget, currency in circulation outside the banking system also fell. This is fascinating because it implies that people are either keeping their money in banks or moving to digital transactions, a trend we're seeing globally. Now, let's talk about deposits. Non-government local currency deposits actually increased to EGP 10.347 trillion. On the surface, this seems like a positive sign, more money in the banking system. But here's where it gets interesting. The breakdown of these deposits reveals some hidden patterns. The household sector, for instance, holds a staggering EGP 7.004 trillion in time deposits and savings certificates. What makes this really interesting is that it shows Egyptians are prioritizing savings, possibly as a hedge against economic volatility. If you take a step back and think about it, this could be a smart move in an uncertain global economy. On the flip side, foreign currency deposits took a hit, dropping to EGP 3.264 trillion. This is a detail I find fascinating because it could reflect a shift in confidence in the Egyptian pound or a response to currency controls. Personally, I think it's a mix of both. What this implies is that businesses and households are either converting their foreign currency holdings or moving them offshore. This raises a deeper question. How will this impact Egypt's foreign exchange reserves and overall economic stability? Here's the broader perspective. Egypt's banking data isn't just about numbers. It's a reflection of how the country is navigating global economic challenges. From my perspective, the increase in local currency deposits shows resilience, while the decline in foreign currency holdings signals caution. What many people don't realize is that these trends are part of a bigger global narrative, where emerging markets are recalibrating in response to inflation, interest rates, and geopolitical tensions. So, what's the takeaway? In my opinion, Egypt's banking sector is at a crossroads. The data shows a mix of strength and vulnerability, which is pretty typical for an emerging economy. One thing's for sure, this is a story worth watching. It's not just about Egypt, it's about understanding how economies adapt under pressure. And that, my friends, is what makes this data so compelling. What do you think? Is Egypt's banking sector on the right track, or are there red flags we should be paying attention to? Let me know in the comments below. Until next time, keep thinking critically and stay curious.